Hello, everybody. This is Kimchi Crypto. Today, I'm going to talk about aren't we late in crypto? My answer is let's dive in. US spot Bitcoin ETFs saw $358 million in net outflows, ending 10-day inflow streak. Thursday's outflow also marked the largest single-day exit for the ETFs since March 11th. As we know, Bitcoin, when it coughs, altcoin got a bad cold. That's, I think, the current situation right now. SEC says POS, proof of stake staking activities, do not constitute securities transactions. The SEC's Division of Corporation Finance said staking activities on proof of stake networks do not constitute securities transactions. Rebecca, the chief legal officer at Jito Lab, said this clears the way for crypto ETFs to include staking. Nobody pays attention on this type of news, especially when altcoin price is down like these days. But this is amazingly good news for all altcoins, especially POS, with staking services. For your information, huge profit is made when you take some risks. And profit comes when you bet on the unknown future, not on the present. I think this is for quality altcoins right there. Specifically, ancillary services encompass self-staking, self-custodial staking with a third party, and custodial arrangements where custodians stake on behalf of asset owners. Whatsoever that might be, whatsoever staking services, those are not securities. That's what it means. Exactly, that's contrary to the opinion of Gary Gensler. Today's statement provides welcome clarity for stakers and staking as a service providers in the US, as the peers said in a statement, adding that providing security is not a security. Providing yields itself is not forbidden at all, which is very much essential for Ethereum, Solana, Cardano, etc., those altcoin POS ETFs to include staking services in the end. When staking services is included in Ethereum ETF, for example, the opportunity to buy Ethereum at this bargaining price will be gone forever. That's what I think. Another indicator for when alt season? Well, as you know, global liquidity rose up significantly. That was why Bitcoin price went up a lot. Now it's somewhat pause. We're in it. As you know, European Union, China, Canada, UK, Australia, New Zealand, South Korea, most countries already lowered interest rates. Fed rate is, however, still at around 4.3% or even higher than that. That is relatively very higher than that of other countries. What does this mean? This high interest rate in the United States mean in the markets? Here's the thing. As of April, US money market fund assets have reached a record high of approximately $7 trillion. This is an amazing increase compared to its previous years. This means MMF assets have grown by over $1.8 trillion in just 2 years, marking a substantial rise. Why? Why are money market funds growing so rapidly especially in the US? Attractive yields. Money market funds have been offering yields around 4% or even more, which is significantly higher than its previous years, making them appealing to investors seeking better returns on cash holdings for sure. Second, market volatility. Recent spikes in financial market volatility have prompted investors to seek safer, more liquid investment options for sure. Third, shift from bank deposits. Events such as collapse of Silicon Valley Bank led to a flight of deposits from banks to money market funds, which is very much understandable. Fourth, institutional and retail demand. Both institutional and retail investors have increased their allocations to money market funds. Here's the thing. It's a very simple question. And here goes the reality fact. The recession, suppose, has been with us for the last 3 years because of strong dollar, inflation, sticky oil price, plus higher rates. And then Trump added a lot more huge uncertainty with tariffs. If you are CEO of a or you're a money manager in a huge corporation, would you invest huge amount of money now or wait and park just most of your money at MMF funds and receive the yield of around 4.5%? $7 trillion is currently parked at MMF market right now. Like it or not, we need to wait for Federal Reserve's first rate cut. Good news is, however, crypto is the fastest to react to rate cuts. At least what we need is expectation of Federal Reserve's first rate cut. At least the expectation of it. By the way, Bitcoin dominance is around still at 64 point something percent. All being said, I'm still buying the dip, especially chosen altcoins. Last but not least, another good news for crypto. Here goes Fidelity. Fidelity shakes up retirement planning with individual retirement accounts that offers direct exposure to Bitcoin, Ethereum, and Litecoin. Fidelity Investments has introduced Fidelity Crypto for IRAs, enabling eligible U.S. adults to invest in Bitcoin, Ethereum, Litecoin within three types of things. This new offering, launched on April 2nd, features no account fees, 1% transaction fee, and enhanced security measures. I can't stress enough the impact how this news will bring in the forthcoming future. $17 trillion, which accounts for 40% of retirees' retirement fund in the United States. $17 trillion can be poured into Bitcoin and quality altcoins with huge tax benefits. This is huge news. Retirement funds usually buy assets but never sells, at least for the 20 to 30 plus years. I'd say you are not late at all. For sure, Bitcoin first and prime altcoins to follow later on. Not only spot altcoin ETFs, but index funds, sector ETFs, AI ETFs, gaming ETFs, POS, staking, yield funds, etc. You can name it. Whether you believe it or not, you should bet on Wall Street giants' greed, and that is coming around the corner. Thank you for listening.